Hello, friends. July starts in 2 days, and this month there are 5 specific financial situations that are going to cost Americans money. Some through deadlines that are closing fast, some through new fees showing up at the checkout counter, and some through automatic payments that can change without warning. Today, I'm walking you through all 5 in order of urgency, starting with the one that expires in just 10 days and absolutely cannot be extended. Financial deadlines in this country do not send reminders, and they do not grant extensions just because you didn't know. So let's get into it. Check number 1, and this is the most time-sensitive item on our list. You need to act on this before July 10th. Not the end of the month, not when you get around to it. July 10th. A federal court ruling called Kwong v. United States, which was decided back in November of 2025, found that the IRS improperly charged penalties and interest during the COVID-19 federal disaster period. That period ran from January 20th, 2020 through July 10th, 2023. Here's what that means in plain English. The court said that under the tax code, all tax filing and payment deadlines during that 3.5-year window should have been automatically suspended. Therefore, the failure to file penalties, the failure to pay penalties, and the underpayment interest that the IRS charged millions of people during that time may have been improper. The National Taxpayer Advocate even issued an urgent public statement warning that tens of millions of taxpayers might be entitled to get that money back. But here's the catch. The relief is not automatic. You have to file a claim. And for most people, the deadline to file that claim is July 10th, 2026. The form you need is IRS Form 843, which is the Claim for Refund and Request for Abatement. You can download it for free right from irs.gov. At the top of the form, you need to write this exact phrase, Protective Refund Claim Pursuant to Kwong v. United States. You must file a separate form for each tax year where you paid these penalties or interest on tax obligations that were due between January 20, 2020 and July 10, 2023. Then, you mail it via certified mail to the IRS Service Center for your address. Using certified mail is crucial. It's your proof that you sent it on time. Now, there are 3 critical things to understand. First, the Kwong decision is being appealed by the Department of Justice. A refund is not guaranteed today. So why file? Because filing by July 10th preserves your legal right to the refund if and when the case is finally decided in favor of taxpayers. If you don't file by the deadline, the statute of limitations closes your claim forever, even if the court ultimately upholds the ruling and everyone else gets their money back. Second, this applies if you paid IRS penalties or interest, not just if you owed back taxes. Maybe you filed your returns on time and paid your taxes, but you were hit with a separate underpayment penalty during that window. That penalty could qualify for a refund.
Third, if this sounds complicated, tax services like H&R Block have confirmed they're helping clients prepare these claims, but you absolutely can file it on your own. Don't let this deadline slip by. Check number 2, the extra fee that's starting to pop up at the register this summer, one that most people don't even realize they're now legally being charged. I'm talking about credit card surcharges. As of this year, fees added to your transaction just for paying with a credit card are now legal in 48 out of 50 states, and merchants are activating them. Over 60% of small and mid-sized businesses are now passing their credit card processing costs on to you, the consumer. This isn't a small amount. The surcharge can legally be as high as 3% under Visa's rules and 4% under MasterCard's rules, although some states have their own lower caps. Colorado, for example, limits it to 2%. What this means in practice is that a $200 grocery run paid with your credit card can now cost you an extra $4 to $6 that didn't exist a year ago. A $150 restaurant bill can have another $3 to $6 tacked on. Now, merchants are required to disclose these charges before you pay, either with a sign at the door, a notice on the checkout screen, or on the receipt itself. But let's be honest, a tiny sign you don't see until you're already at the counter isn't much of an advance warning. The way to avoid these charges is simple. Pay with a debit card or cash. Surcharges on debit card transactions are prohibited in all 50 states by federal law. If a merchant ever adds a surcharge to your debit purchase, they are breaking the law. This fee only applies to credit cards. So, if you routinely use a credit card for groceries, gas, and restaurants, the cumulative monthly cost of these new fees is worth your attention. And for those of you in Connecticut, Massachusetts, or Maine, these surcharges are still banned. If one shows up on your receipt, you have the right to dispute it. Check number 3, the mid-year tax checkup. July 1st marks the halfway point of the tax year. For anyone who receives income that doesn't have taxes automatically withheld, that includes pension payments, Social Security, IRA distributions, self-employment income, or investment income, this is your moment to make sure you've paid enough in estimated taxes. The IRS requires you to make quarterly payments if you expect to owe more than $1,000 in taxes for the year. If you underpay, they hit you with a penalty, which is currently a painful 8% annualized on the shortfall. There's a specific trap this year, especially for seniors. The new $6,000 senior deduction from the One Big Beautiful Bill can significantly lower taxable income for anyone 65 and older. But many seniors, and even some tax advisors, haven't recalculated their estimated payments to account for it. If you've been making payments based on last year's income, you could be overpaying, or if your income has changed, underpaying. The mid-year point is the perfect time to run the numbers. The next deadline for estimated taxes is September 15th.
Use this time to correct any shortfall before it turns into a bigger penalty at the end of the year. Check number 4, the mysterious insurance premium adjustment. For anyone with Medicare Advantage, Medigap, or a private supplemental plan, July can bring a change in how much is deducted from your account, often with no clear explanation. Insurance companies conduct mid-year administrative reviews, and some plans adjust their premium deductions starting this month. This can happen because of a mid-year rate change that was buried in paperwork you received in the spring, or simply a shift in billing cycles. The practical step here is simple. Look at your bank account or the deduction line on your Social Security statement. Compare the amount that came out in July to the amount from June. If it changed, call your insurance provider. Ask them specifically why the amount is different. Is it a permanent increase or a one-time catch-up deduction? Catch-up deductions can happen when a billing shift causes 2 months of premiums to be collected in one. A permanent increase is different, and you have the right to know why it happened. If you weren't notified in advance, ask the insurer when and how this change was disclosed and request a copy of that notice. And finally, check number 5, the Social Security payment timing shift. This one catches people off guard every time. A calendar anomaly in July 2026 affects 2 specific groups. If you started collecting Social Security before May 1997, or if you received both Social Security and SSI, your payment will arrive a day early on July 2nd because the July 4th holiday is being observed on Friday the 3rd. But for SSI recipients, the situation is more significant and requires careful budgeting. Your regular July SSI payment will arrive on July 1st as usual. However, your August SSI payment will arrive very early on July 31st. This is because August 1st falls on a Saturday. The result is that you will get 2 SSI deposits in the month of July, and you will get 0 in August. If you spend both of those July deposits thinking you got a bonus, you will have nothing left when your August bills are due. So for SSI recipients, the plan for July is this. On July 31st, when that second deposit arrives, set it aside completely. Do not spend it until August 1st. Treat it exactly as you would your August payment, because that is what it is. So to recap the July financial picture, file IRS Form 843 by July 10th if you paid federal tax penalties between early 2020 and mid-2023. Switch to debit or cash to avoid the new wave of credit card surcharges. Review your estimated tax payments for 2026, especially if you qualify for the new senior deduction. Check your July insurance premium against June's and call if there's a difference. And if you receive SSI, that July 31st deposit is your August budget. Share this with someone you know who needs to hear it, especially before that July 10th deadline. I'll see you in the next one.